Hey guys, Outhenticfx here. Today we'll be learning about consolidation and expansion, supply and demand theory, and I will be getting into the nitty-gritties and helping you guys understand it more. Let's get into it. So guys, with every market, you need to understand the market cycle of every Forex market, right? The market either does one or two things. It either expands or consolidates, right? So to get into consolidation, consolidation is a period in the market when the market moves calm, meaning sideways, right? We call this a range or a range bound market. We will be able to identify equal highs and lows, right? So this is an example of a consolidation movement. You can see we're clearly moving sideways, creating equal highs and equal lows, right? The range can be tight, meaning that there isn't enough orders being accumulated in this area. So the smaller the consolidation or range is, the less accumulation of orders are being put into that specific area. Or the range can be loose, meaning a lot of orders are being accumulated in that area, guys. So the bigger the area is, the more money is being dumped into it. The smaller it is, the less money is being dumped into it, right? This can occur in any single time frame, right? It just depends on what time frame you use to trade on. I personally use the 1 hour, 15 minute, and then the 1 minute for entries. Obviously, it's my style. You guys can choose whether it's the 4 hour or the 2H, whatever, it depends on you. And then from there, let's get into expansion, guys. Expansion is a period in the market where price is moving aggressively in one direction or the other. So that means it's basically moving bearish or bullish, guys. It's moving up and down, not sideways, guys. We will usually see an impulse move either to the upside or the downside, where price will give us large body candles or wicks, guys. This is known as expansion, right? So if you can see, we're going to have consolidation. And then once price breaks out of that consolidation, we'll then see price start to move aggressively either to the downside or push up, come down, pull back, and then continue up to the upside, guys. So this is known as expansion, right? Large body candles and wicks will be a part of this expansion period in the market, guys. So how do we use consolidation expansion into our benefit, right? This now changes into demand zones and supply zones. So let's get into it, guys. Demand zone is an area of consolidation, right? You see consolidation that comes before an impulsive move towards the upside, right? This is bullish price action that is formed after this demand is complete, right? This is known as a bullish consolidation block. A range bound market is created before the bullish expansion. So in the market, depending on the trend, remember we have consolidating markets, bullish markets, and bearish markets, which I taught you guys about in the last video of market structure, right? So you'll have a bullish consolidation block over here, which we know as a demand zone, right? So price will consolidate, break out, come back into that demand zone, and then continue expanding, right? Demand zones can act as support when price returns or makes a pullback into this bullish consolidation block. We use this pullback to enter long positions / buys, right? So once we see that clear break of structure to the left, we've broken structure, created a new high. We then need to now see, is price going to create that high, higher low, and then create a new higher high, right? So price will always come back into the demand zone, guys. The demand zone is like a magnet, vice versa with the supply zone. They're magnets. So the banks will always use these areas to trade off. They don't just place money anywhere and just let price run. There's certain places that they target, and this helps them to manipulate the market at the same time, guys. So remember, we always want to trade with the banks and not against the banks. So it's better to use this momentum and trade with the banks instead of trading in consolidation ranges, guys. And then from there, how to mark off our demand zone, right? We can either take the low of the range, right? And then the highest candle body. So we take the highest candle body of the previous expansion, guys. So you'll see that we'll have a candle, for instance, around this area. I'll show you live examples on the charts in a few. We'll have a consolidation, and then from there we'll have the highest candle body of in that range, guys. We mark that off, and then we mark the low of the high of the range, sorry, and then that's our expansion / demand zone, right? So we take the low of the range, and the highest candle body, or we can take the entire range as a whole, guys. I'll show you that right in a few. Okay, when it comes to supply, right? Supply zone is basically the same as demand, but vice versa. Now we're speaking in bearish terminology. Okay, cool. Supply zone is an area of consolidation that comes before an impulse move towards the downside, right? So you'll have your consolidation, then price will impulsively move to the downside, breaking structure to the left, right? And then from there, this is also known as bearish price action. Once this block is this consolidation block is formed, we then now need to know that, okay, we have broken structure. So this becomes our supply zone / bearish consolidation block, guys. A range bound market is created before a bearish expansion. Remember that. I will show you an example in a few. Supply zones can act as resistance when price returns, right? Remember, as I said, demand zones and supply zones are like magnets. The banks will always return price to those areas to activate their positions or mitigate price where there's imbalance, and then continue price in the direction they want to see price going into. So we use these pullbacks that the banks drive price into to enter sell positions or short positions, whichever term you want to use, guys. So the way we mark off our supply zone is basically similar to the demand zone. We take the high of the range, which is here, and then the lowest candle body of that range, or we can take the entire range as a whole. Okay, cool. Let me show you an example on the chart of a demand zone, guys. Okay, cool. Demand zone, as I said, the area of consolidation that comes before an impulse move towards the upside, guys. You can see that we have this range, entire range, right? We don't need to include the entire range. We can just include the previous 4 to 5 consolidating candles within that range. So as you can see, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles right here. We can use this range to mark up our demand zone. We take the low of the range, right? So the low of the range will obviously be these previous candles. We do not want to look at the whole entire range. We're just looking at these candles over here. So I've marked up the low of the range, right? And then from there, the highest candle body. So usually some people will mark off the highest candle body from here, but I just prefer to use the entire wick as well, because that on a lower time frame is a full body candle, right? So from there, the demand zone is created once the expansion is created, right? So this is our expansion. You can see large body candles, and price suddenly pushes up aggressively, breaking structure to the left, right? You need to understand that we are in a uptrend, so we are making those higher highs and higher lows. So once we get that break of structure to the left, creating that new higher high, the banks will pull price down back into our demand zone. Hence why we say our demand zone is also used as support, right? That's where we enter long positions / buys. So usually some people will put their stop loss just below the demand zone, or have it a bit tighter. I will show you how we find entries on the lower time frame, such as the 1 minute time frame and the 5 minute, right, or 15 minute. Okay, cool. Demand zones can be used to enter longs, and we can also use them to close any short positions. So let's say, for example, we're trading off a supply zone to the left, far left. It hits the supply zone. We can sell price back into the demand zone, because price basically works from demand to supply, right? We always need to see price moving to the next supply zone if it's coming off a demand zone. And for the supply zone, we need to see price moving down to the demand zone if it's coming off the supply zone, guys. So very simple concept. This is how we trade. No extra things on the charts, no trend lines, no, indicators and so forth. So to get into an example of our supply zone, right, I have an example over here, right? We can clearly see that this is creating lower lows and lower highs, right? We are in a downtrend here. Market has shifted. We have this consolidation area over here with the previous 1, 2, 3, 4, 5, 6 candles, right? That's enough to be a consolidation or a range bound market. We do not need to use the entire area over here, guys. Okay, cool. So supply is the area of consolidation that comes before an impulse move to the downside, bearish price action, right? So we do know that the trend is bearish at this point. We have our consolidation block, bearish consolidation block over here. We do have that break of structure to the left, and this is our expansion to the downside, guys. Once we get that expansion, we take the high of the range, which is over here. Let me just adjust that a bit. Take the high of the range and the lowest candle body. So the lowest candle body will obviously be here, right? And then from there, supply zone is created once the expansion is formed. Price action will fall into the demand zone from the downside, right? So you can clearly see price pushes down, and then from there it will fall into it from the downside and then create the next expansion, breaking structure once more to the left, guys. You see, bam. BOS bottom. So our supply zones can be used to enter short positions. We can also use them to close any long positions, guys. So you need to understand one thing, guys. Supply and demand zones work hand in hand and can be traded off each other. Let's look for an example where supply meets demand and demand meets supply. Give me a second. Let me look for that example. Okay, cool. Here's a nice example, right? So we have our break of structure to the left. Break of structure to the left, BOS, right? BOS top. And then from there, you can clearly see we broke structure here as well. Broke structure here as well. BOS bottom. So now where's our supply zone in this area? Well, it's the consolidation that happens before the expansion. So in this instance, we now need to look on the lower time frame for that consolidation or area. So I would have highlighted this area over here, right, as my supply zone. As my supply zone. Bam, we're gonna make that red. And then our demand zone can be this area over here because we broke structure. So this area, obviously, we know. And one more thing, guys. Remember, there's a difference between liquidity being swept and price getting into a demand zone. So obviously, on this example of this demand zone, we can see that clearly price did not tap into our area of interest. We missed it because we were sweeping liquidity, which was resting here at these lows. Give me a sec. Liquidity was resting here at these lows, so liquidity swept. So in future, what will happen is this demand zone, price will return to this demand zone, right? To activate positions in this demand zone. So anyway, to get to supply, here's an example of price moving into supply. We are bearish, created that low, lower high, lower low, lower high, lower low. Once that happens, we break structure, creating a new high, higher low, higher high, higher low, right? So this at this point is price coming into our supply zone and selling off. We could have taken this trade and then catch all this move down, sweeping liquidity, guys. I will teach you how we know when to sweep liquidity, etc. Okay, cool. This is an example of a nice supply zone being activated, right? And then from there, let's look for another demand zone since we couldn't get that one. Okay, perfect. Here's an example here. We have a clean break of structure, right? BOS top. And then from there, we have this nice consolidation block or range. We mark the high of that range, or the highest candle body and the low of the range, which is obviously there. Bam. And then from there, price break structure impulsively. You can see big body candles leaving wicks behind. From there, what happens, guys? Price returns into our demand zone from the upside, and we can target the next high, right? And then this is also another example of price moving from demand into supply, because if we look at these breaks of structures on the lower time frame, there is a supply zone here that price is reacting off from here. Hence why we have that nice push to the downside, guys. So our strategy when it comes to supply and demand is very, very simple, guys. Nothing complicated, nothing hectic. All you need to do is follow the instructions and mark off your charts. You need to know where you are in the market, guys. So just to repeat the rules, supply zone is the area of consolidation that comes before an impulsive move towards the downside, showing bearish price action. We take the high of the range and the lowest candle body of the entire range. Supply zone is created once the expansion is formed. Price action will fall into the demand zone from the downside. Okay, let me just quickly change that, guys. It's actually supposed to be supply. Sorry for that. Let me just quickly change that. It's actually supposed to be supply. Okay, cool, guys. And then to get back to demand zone, the demand zone is the area of consolidation that comes before an impulse move towards the upside, bullish price action, right? We take the low of the range, right? The low of the range, and then the highest candle body, including the wick, guys. I include the wick always because sometimes price will miss, the body. If we were to enter on this body here, we would have missed our entry. So sometimes you just take the wick, and then from there, you can either take the entire range, right? So this is the entire range over here, right? And then use that. So demand zone is created once the expansion is created. So we see that expansion with large bodied candles or wicks, breaking structure to the left, guys. Price action will fall into the demand zone from the top side. So it will push up, come back into our demand zone, and that's how we trade supply and demand, guys. No support and resistance, no fancy things, guys. Just simple price action following bullish and bearish order flow, guys. We need to know where we are in the market. If the market is bullish, do not go against the market and try selling or looking for supply zones to find, sells on. Stick to the bias, guys, and trade with the banks.